All right, in today's video, we're talking about property coinsurance. My name's Peter. I'm recording this in 2026 for the Falcon West Academy. So, property coinsurance, what is it and how is it calculated? Coinsurance is a way for insurance carriers to ensure that policyholders are insuring to value on property. That could be anything from a habitational building to a commercial building to even inventory. And we'll see this in policies quite often, although there are carriers who will waive the requirement. And the calculation is something that a lot of people get confused on. Even people who have been doing this for 5 years will need to refer back to how it's done. It's an equation that will come up on the property and casualty insurance exam if you're getting your license. I think my exam had 2 or 3 questions on it, so it's good to know. But it's quite straightforward. So you have the amount of insurance carried divided by the amount of insurance required, multiplied by the loss, and then finally you subtract the deductible. So insurance carried is the actual amount you've purchased. Insurance required is the property value times the coinsurance percent. So usually it's 80 or 90%. Sometimes we'll see 100% on inventory. Amount of loss is the total financial damage from a covered event. And the deductible is your out-of-pocket cost before insurance pays. So we're going to go through 2 different examples. First one, the property value is $100,000. We have an 80% coinsurance percentage. The actual insurance required is $80,000, which is 80% of the $100,000. We have coverage purchased of $70,000, so they're actually underinsuring this property by $10,000. They experienced a $40,000 covered loss, and so this is what the calculation looks like. It's going to be $70,000 of their carried coverage divided by what they're supposed to carry of $80,000, multiplied by the $40,000 of loss minus the deductible. Okay, so if I bring over my calculator here, we'll do the math right here. So it's $70,000 divided by $80,000. So that we get our coinsurance factor of 0.875. Multiply that by the loss to get what's recognized. So $35,000 there minus a $5,000 deductible gets us to $30,000 that is going to be paid out here. So ultimately, what does that look like? We have a coinsurance penalty of $5,000. So $30,000 is paid out on a $40,000 loss with a $5,000 deductible. So we're left with a coinsurance penalty of $5,000. So that's the $5,000 reduction in claim payment due to underinsurance, and then you have a policy deductible of $5,000. Okay, so that's tough. You basically have a $40,000 loss, and you'd get a check from your insurance carrier for $30,000, right? You're going to pick up the $5,000 on the deductible, and you're still short $5,000. We'll get another example here, though. So this is a properly insured building, or at least it meets the coinsurance requirement. Same $100,000 building, same coinsurance percentage. Actual insurance required $80,000, same amount, but they purchased $80,000, which was reflective of the actual insurance required. Same loss, $40,000 loss with a $5,000 deductible. If we go through this math, right, we have $80,000 divided by $80,000. I'm going to do it here on the screen. So we have an $80,000 carried divided by $80,000 required times the loss, $40,000 obviously, minus $5,000. So we have a $35,000 with a $5,000 deductible. The coinsurance penalty is 0. So your full loss coverage, so there's 80% requirement was met. The insurance pays the full loss amount. The only out-of-pocket cost is the standard $5,000 policy deductible. So that deductible is, you're going to elect what that is at the start of the policy. That obviously can play a factor here, and it's important to note that as well. Okay, that's how coinsurance works. It's a very simple formula, but it's something that is really critical to understand when you're putting policies together, and obviously if you want to pass the insurance exam too. Okay, so the key takeaway is that you want to make sure that if you're a own property, you want to make sure that you're looking for that coinsurance requirement, asking to get it waived whenever possible, but also that you're insuring to the limit, right? The whole goal is to insure to the limit of what you're carrying. So it's properly insured. And that way, if you do have a loss, it's covered. All right. Really simple. We don't have to make this video any longer than that. If you have any questions, let us know. I will put some resources into the notes below. So we actually have a coinsurance calculator on our website with a couple different things on there that you can review as well. But for the Academy students, I prefer you to understand how it works and do it by hand. So if you're ever called upon to do it, you can recall it quickly. All right, that's all we got. Thanks.